This is London with Bitcoin Spike and VIP Trader. VIP Trader, hope you're all doing well. Let's talk about Bitcoin. Let's close out New York in terms of the details for NVDA, for Tesla. Good pickups, way to trade. We'll discuss the details. Remember, a delayed stream not intended for any purposes of trading whatsoever. You trade on your own. You let us know how it goes. We'll let you know how it goes with us. We're going to key into Bitcoin after discussing a little bit in terms of NVIDIA. Nice move to the upside, breaking that level of resistance today across the top. That flat top resistance was a little bit difficult, okay? Didn't know exactly how to classify this. I would say that the best pattern in play was probably going to be the specific flat top resistance, descending line of support, not much of an inverse head, and the right shoulder like we had on Tesla that played very nicely for a bit to the 38.2, then a capitulation to the downside. Bit of a warning in the back to VIP, etc. Just in terms of this pattern dynamic. Understand that volatility expression that we have on the 5-minute for Tesla, looking for a completion to this top line resistance. Ultimately, this is going to be the bull target up in this direction. We can't really say what's going on with Tesla, okay? If we're looking at that top line resistance and along the level of this, guys, currently about 236, I'll just say that we're not real certain what's going on with Tesla, what's going on with Elon in terms of the entirety of the conference. What was this, guys? This earnings call just didn't really go off like we had hoped it would in terms of added commentary, etc. So looking at the fundamentals is one thing, and getting a little bit blindsided, that's all right. We'll take the good with the bad. In Tesla, we want the volatility. Looking at that specific flat top resistance, the level to beat tomorrow is going to be 221.50. Going to be a level at which we will look to engage. Now, Bitcoin. Let's discuss the details on Bitcoin. The bottom line, where we were at that over, under on the 200 weekly moving average was the level to get into in terms of a specific, guys, specific carry on trade. Just beautifully well done. Very, very nicely done. And this is the level we're going to stay off of. Let's just all make that big time agreement here that we are going to stay off of the $30,000 mark. Does everyone agree? We're going to stay off of that $30,000 preceding level near flat top resistance. Everyone is in full agreement. Fantastic. In terms of a preceding flat top resistance, rain on the parade. What's going on? Hold on. You're talking about a preceding underlying flat top resistance. What do we have to buttress us? If we were to look at that specific, at the specifics in play, we do have the breakout, okay, across the top. So we have it included. This would be included a guarded downside flat top resistance that we'd be looking at that $30,000 mark. What do we have before there, guys? We've got that 32K. 32K being that flat top resistance essentially on that daily, 8-hourly. You'll see it on the weekly, the monthly as well. So being up and out is a fantastic thing. Do mind yourself of one thing. On the weekly, that's the chart to go to. The weekly chart's going to have pivot 1, pivot 2, boom, bam, bam. And in terms of that top side resistance, that is the line to catch. If you're looking for what got hit, you're looking for the hurdle that the bulls ran into, go to that weekly time frame, look at exactly the hit that we got into that weekly line of resistance, ba-boom. So our attention is being directed towards the weekly. We can say that our attention for purposes of the pickup was the 200 weekly, noted. In terms of the specifics for the weekly chart, is there anything else that we can garner from the weekly? Let's pay attention. Let's look at the weekly and see what can we gather from the weekly time frame. That's a good question, huh? What can we gather from the weekly time frame? We can say that we're up and over the specific top side standard deviation, and that we'll need to set up and over this standard deviation essentially to ride this as a level of support rather than resistance. We're trying to power up and through that level of resistance, essentially that top side standard deviation band. We've come into contact with that top side band, and I'll just say that we've hit the target, fantastic, but really what needs to flip is this weekly, and we need to hold this weekly standard deviation to the upside. Can the bulls flip it and use it as support? We've got a number of days here before we really have to, I'd say, come to that decision factor in terms of, guys, the new weekly set. Do be apprised of the fact that this is sloping up, where that gives us a bit of, let's just call it a crawl advantage. If we're going to look at the level of support to traject out, up, and over, we would prefer that to be, let's get it vertical if we can, right? If we're going to establish something as support, let's get it vertical. Real bulls would like that, right? Let's run into, there's a vertical wall for price. It sounds great. So it's nice that it's sloping to the upside. Again, we don't like holding sloping angles, sloping anything way too far to the downside in terms of moving average or otherwise. So looking at the dynamics in play, we also do have the specifics. Let's take a look at that rising feature here. Let me hide some of these labels, just some identifiers that I'm working with here. But looking at essentially, if we were to craft this out of a flat bottom support, ascending line of resistance, we can note this on the weekly as well. Just for the candle wicks, this is an immediate, we want to call it an intermediary. We could, an intermediate, meaning intermediate or the entirety, the full scope of this range to the downside. So intermediary or intermediate level patterning, which is confluent with or is a shared component with the specific cupature and handle. We got that right. The bottom line is this: I'm extremely excited that each and every one of you were apprised of the 200 weekly moving average, that you are encouraged to take along, not only for a flash trade or short-term purposes, but for long-term purposes. That is important. That goes in terms of, I always say this, and I just mean this, I really appreciate anyone and everyone who have made these trades possible, okay? And I mean at the institutional framework level, the people who have made these trades possible for us to trade. That's just important for us to appreciate. Let's just say the thanks where the thanks is due. It's not all us. You think it's just all us? Oh, we got the call right, we hit the buttons right. There's a lot of work that goes on in the background facilitating our opportunity to engage in trades like this and do well in the market. If you're doing well in the market, yeah, absolutely. Shout out to everyone else, the entire framework of the markets that's put in place that allows us to execute these trades. It is quite a pleasure to be in the market and to be able to operate in line with this level of volatility and with these technicals, okay? The framework that played itself out was just fantastic. You know this. So we don't take that for granted, that the 200 weekly really evidenced itself as it should have in terms of the launch feature and factor here. We really appreciate anyone and everyone who has a hand in keeping this market together technically at whatever level that may be, okay? So we're definitely in that camp in terms of just shouting out and saying thank you where it is due. The specific 20 moving average on the hourly is of concern. Want to shout out to Venus. What's going on? Venus, nice, good afternoon. Hope all is going well. Let me put VIP, boom, here we go, Venus. In terms of the 4 hourly, we're losing a bit of momentum, okay? In terms of shorts, this line here is an attractive nuisance, let me tell you, because we have been hitting the specific cap line feature to the upside. We've been breaking it, but before we have essentially broken such, we've really had some nice shorts. Look at this specific cap line feature, bam. That's the RSI stochastic MACD line. If you don't see that as making money, boom, boom. That's nice, guys. On the 4 hourly, bam, bam. Very, very nice. On the way up, just cradled, literally price action to the upside continually. Very nicely done. So we're looking in this zone as a potential frustrator for the bulls. We got that right. Now, in terms of the dynamics as we're looking at this level of resistance, the worst thing in the world is just to be afraid of a level of resistance and watch it just get left behind. One of two things is going to happen. Let's talk about this in terms of the dynamics, in terms of the NASDAQ. In my mind, one of two things is going to happen, and we can note that it seems like Bitcoin has really broken forward and established its own edge right now. The fundamentals may be pouring through a little bit different in terms of the sequence of events for ETF, etc. Whatever we've got pushing Bitcoin just seems to be a little bit ahead of the curve right now in terms of the pour down that we got from the NASDAQ, the pour down that we got from NVDA, the pour down that we got from Tesla. And there is Bitcoin with bam, the rocket ride to the upside. Remember that we were correlated with the specifics on NVIDIA. You remember that we had that flat bottom support. Just pay attention, flat bottom support, ascending line of resistance. Yeah, so we had this confluence here with NVIDIA. Let's switch back over to Bitcoin real quickly. You see this with Bitcoin. We had the flat bottom support, ascending line of resistance. So the fact that we are up and out of this is critical, big time critical. Taking a look at things, if we were to analyze NVIDIA, okay, that means NVIDIA, if it wants to keep pace, the #1 graphics processor company in the world, if they would like to keep pace with Bitcoin, Alrighty, that's a big statement, but they're going to have to blow through the roof like that. They're going to have to match up with, just look at it, guys. They're going to have to match up with what Bitcoin just did. Same pattern in play, same exact pattern in play. Nice to see Bitcoin front run. Now, in all fairness, we are established in terms of the confluence, flat bottom support, ascending line of resistance. Okay, we're established in line with the patterning dynamics and have that crossover, the confluence, that correlation with NVIDIA. But look at NVIDIA. As we do look at NVIDIA, it's like, okay, we're in the same pattern, but it's beyond the stratosphere. Look at the preceding high, and NVIDIA's all the way up through. So as we're looking at the parallel dynamics or the confluent dynamics, like, well, that would actually put Bitcoin at about 150K, right? As you look at the dynamics involved. So we have that differential to consider. While Bitcoin just did hammer up and out, we're now within what percentage? We have trajected back up into about a 50% discount. Is that right? Let's take a look. About 48.74, about a 50% discount, whereas NVIDIA, from its specific, if we were to look at the trajectory to the upside, is up about 28% from its all-time high. So there's a big differential as we look at and compare and correlate, and as we walk into the correlative for the NASDAQ. That's the tech sector. We like to look at the correlative for the NASDAQ in terms of the tech sector. Let me see what we got. Venus, good afternoon. You're welcome for streaming. My pleasure. Hope everyone had a great trading day, says Venus. What's up? Everybody had a great trading week, without a doubt. Great trading month, right? You got it. So looking at the NASDAQ for correlative purposes, what we're going to be saying is we can appreciate the dynamic wherein even the NASDAQ is near an all-time high. Remember NVIDIA, again, bam, through the roof, all-time high. Bitcoin is way down here. So Bitcoin's low. Bitcoin's gotten the attention now, right? It's gotten the attention. Now Bitcoin retraced more. Yes, Bitcoin has retraced quite a bit more. In terms of the relative, just looking at the relative framework here, though, let's look at NVIDIA. NVIDIA actually retraced, let's just mind these technical, 65% golden pocket level, essentially. Bitcoin, a little bit more than that, but you have to look at, as we're discussing, what's performing when, why, and where. All right, a 75%, let's say a 75% versus a 65%, 75% on NVIDIA, 65%, 65% on NVIDIA, 75% on Bitcoin. All right. Now, as we look at the differentials, low to high on, we're gonna explore the correlations here. The low to high on NVIDIA was 365%. We got that right. The low to high thus far on Bitcoin is what? Let's pay attention. This is volatility, is why we're in the markets. You guys got that right. 134. Okay, so we're looking at that 134 versus that essentially that 350. So 150 versus 350 essentially, and I'm interested in that to the extent that we are at a point of correlation. Just look into this. If we were to look at even the NASDAQ, say, okay, where is our correlation? If Bitcoin just broke to the upside, do we have any kind of, and this is what I'm prepared to look at personally, and what my gut is telling me on the market right now. What my gut is telling me is that we have one of two options. Okay, first of all, is Bitcoin can just break completely loose of any correlative on any kind of other, let's say, distinguishable or similar asset. Were it to be the NASDAQ, or were it to be specific, I don't want to say Tesla, but there's a lot of correlation and whatnot with Tesla and Bitcoin. You all will see that. We trade those, we analyze them together. In addition, NVIDIA, we see a lot of the same patterns, a lot of the same volatility. Last week, for instance, we saw nearly double digit on each and every one of the NVIDIA, Tesla, and Bitcoin charts. Nearly a double digit day, almost sequentially back to back to back to back. It's like they're the hottest, most volatile thing. Traders who are trading and looking for volatility are focused on NVIDIA, Tesla, and Bitcoin. Why those three? Potentially because of liquidity. Liquidity. You can trade them. You can put a lot of money into an NVIDIA trade or a Tesla trade or a Bitcoin trade. It'll handle the liquidity, okay? You can go and look and find all kinds of wild tail volatility on penny stocks or penny alts. The point is, in terms of liquidity function, the Tesla, the NVIDIA, and Bitcoin will handle big trades. Copy that. You got it right. So when I'm looking at these charts and I'm grouping them together, when I'm bringing in the NASDAQ, trying to get an overall read on the market, right? This was just the framework that I wanted to bring something into. To me, we've got one of two options. I guess we don't want to couch it, but let's discuss the options here. First of all, this on the NASDAQ, this bounce that we just got. Okay, this bounce that we just got in terms of the framework here could decide to hammer to the upside, right? Bitcoin can stay correlated, okay? Bitcoin can stay correlated. Let's do this just so that we have a little bit of a better framework, a layover, just so we can talk about the market. We're in the market. Let's talk about it, right? Hope you're all doing well. I know that you are. Let's discuss this and let's just draw this over the top so that we can talk a little bit in terms of maybe some catchy situations, maybe a little bit of perspective that we might not have otherwise thought of, not that it's conjecture whatsoever, but that it is in line with a correlative analysis. Let's look at a correlative analysis. As we were to look at, I'm going to line this out in blue. Let's line the NASDAQ out in, let's put this in blue as well. Now, if we were to look at the dynamics in play here, and I've obviously conformed the patterning on Bitcoin just a bit, okay? And to the extent, though, that it's difficult to just imagine the NASDAQ chart just breaking, boom, to the upside on a descending triangle, it gives us a little perspective, right, if we're to draw in some correlative. But this is going to be the big question for me. As I look at any of the correlatives, whether or not it be Bitcoin, whether or not it be NVDA, and you guys know when we're trading the same patterns all the time, almost every day. The confluence that we've seen with equities thus far, bringing those over into the dynamic in the field of Bitcoin trading has been phenomenal. You see that every day in the back, those who are paying attention to the multitude of patterns we're getting on the opens and on the closes in terms of equities, we're just applying it straight, bam, the same procedure, bam. Like surgeon, doctors are in the room and it's just bam, same procedure, same, like, you know, it's just like clockwork. We're seeing those patterns work out on Bitcoin. So you're getting more of a pattern recognition opportunity and pattern, just say tactical application. It's nice to see that. So when we're looking, let's say, at NVIDIA, when we're looking, let's say, at Bitcoin, there we go. If we're looking, let's say, at NASDAQ. Now we can go through and march through each and every alt, and I essentially went through quite a few of them today in the back, showed you what my charts look like on several key alts. You got that right. All right, to look at some potential derivative gain analysis, G-A-I-N, derivative gain. What's the potential magnitude of the additional moves that could be incoming to the markets, which, let's say, which specific assets might we want to focus that on? My goal is to focus on the highest liquid items that we have on the map, the ones that will carry the most in terms of margin, the ones that will be most predictable, and the most sound in terms of operation technically. So what we're looking at, this is the big question for me. This holds or this doesn't hold, all right? Let's give Bitcoin the front run. Let's give it the front run. Bitcoin decided to front run on some good news or speculation of some good news out of a pattern, okay, wherein Bitcoin has been suppressed quite a bit recently. As you will look at the preceding particular patterns in play, when we've gotten some full, really over completions on some of the patterns that have been in play in terms of even Tesla, for instance. Yeah, big time over completion in terms of the bull flag. This is an over completion. NVIDIA with quite a few over completions in this zone, even that internal micro flags, just nice over completions. Bitcoin has been plagued this year. While it was a good trajectory to the upside after the 75% to the downside, Bitcoin has been a little bit plagued by a lack of performance. You guys know that. In terms of our targets to the upside, did we hit our target to the upside in terms of the inverse head and shoulders from this pattern before we retraced, bam, back down to the neckline? Did we hit the full 100? No, we did not. We did not hit the full 100. So putting this in a bit of context, when we have an overperformance, when you look at that, that's a big difference, guys. Now, we know the maximum fractional completion, the probabilities are greater to achieve about a half, 50% of the amplitude of any pattern in the market. But what I'll say is this: while Bitcoin has underperformed to the extent that we are well under the all-time high of Bitcoin, and we're looking at other assets okay, that have been overperforming individual patterns. And note Tesla. Tesla is nowhere near the stratospheric rise that NVIDIA is. A whole slew of coins, guys, that are not in that same ballpark that we would categorize NVIDIA. But as we look at it, we are going to note an overperformance versus an underperformance characteristic thus far. We're going to note that in the context of having broken out now, okay, because we, first and foremost, is we're looking at the target set here. I'm going to quick draw this. You have the targets in the back. You guys have the targets. But looking at this, and it's definitely worth discussing, if we're looking at the framework here, in a hit into the 23.6, okay? If you guys will draw that on your daily chart from the low to the high with that break neck across the cup and handle on the lines, you'll hit that 23.6. Copy that, draw it on the daily, on the lines. This specific pattern on the daily, on the lines, flat top resistance here, from this curl-in feature to this pivot, from the low to the high, get your extensions up and bam, these are your targets, okay? Capiche? We got it. On the daily, copy that. Okay, looking at the framework, I'm interested in, as is the rest of the market, as we're looking at a new pattern that is in play, the fact that Bitcoin has been underperforming, okay? The fact that we've also just broken correlations. These are two complicating features in the context of the fact that we're now outperforming or front running the specific plays in the market that we have not yet seen an equivalent correlative breakout of, let's say, NVIDIA in a similarly framed pattern, okay? That was nearly exact, guys. We went over all of that, but the complication is, even from an overall market perspective, a correlative, let's just say the market perspective as we look at the NASDAQ, the tech sector, guys, Bitcoin, crypto, tech sector, we're gonna be paying attention to what the markets as a whole are telling us. So while we're looking at the dynamics here, we're going to be cognizant, of the fact that Bitcoin has, as a matter of fact, underperformed. True, yes. Thus far this year on a pattern basis, relative to the Mag 7, okay, the Magnificent 7, okay, AIs, etc. Bitcoin has done well. You got it right. We've enjoyed trading Bitcoin a ton of guys. That's our asset of choice to trade. So it's not down talking. It is just a realistic look at the technical dynamics in play that are before us, which is Bitcoin's been underperforming on the targets thus far this year. All right, it's been underperforming on the targets. That's a big deal, right? We can even say to the downside as well. Noted underperforming on targets to the downside. What did we have here? We had a fantastic, here we go, depending on your time frame that you're on, we had a lower target. We sure did. And what happened? It caught people, didn't it? We were looking at this, our fire and ice indicator had a green byline right here. So it was a pickup at some level, but really, and this is the story, isn't it? We really wanted to get all the way down, didn't we? We did. We had the catch for the fire and ice, let it speak for itself. It did the job. So as we had this specific underperformance to the downside, yep, we had the specific underperformance on the initial bust out to the upside. Yes, we did, before we capitulated back down here. So this is one, and guys, it's a lot trickier than that. You remember this, guys. Let's say bottom line, to get to this point and still be living, kicking, breathing, and just really doing well, succeeding in the market, you guys have made it. You've definitely made it. You've done a great job. This has not been just easy does it. Most recent trade was a little bit easy does it. It was nice on that 200 weekly moving average. That was beautiful. We have to say that. We get to say that. That 200 weekly just boom. Now, in the context of the following, Bitcoin's trappy, has been trappy and nothing but trappy. Even this, guys. Let's go back through one more. And we can continue and go back and forth from pattern to pattern to pattern and show the likelihood here that we're going to get the full completion. So let's talk about it. Move to the upside. Downward sloping channel. That's a bull flag. Everybody knows a bull flag. Yep. And how do we do on the completion? Well, we absolutely just underperformed again. So you are in a zone where continually Bitcoin has been underperforming, hitting a fractional completion of its overall target objective maximum. That is beyond dispute. And that's not just the last couple of weeks. That's not the guys said. That's the last 400 and some odd days. We had 500 days, 522 days, 533 days. I think, yeah, 533 days. Bitcoin has been really laying the groundwork by undercutting traders. Huh. Yes, we get to talk about it. So in the context of, let's just say in the context of any complication that we have in bringing forth any correlative analysis, if we were to look at the NASDAQ again. All right, the NASDAQ. Can we say Bitcoin front ran after a bit of a, this would be the decisive issue that we really need to kind of explore from an intellectual level capacity. I think we can frame it as such. Is it due to, if we're talking about really some negative drivers, okay? We don't even need to mention those names, but the negative fundamental drivers that have pounded into crypto, with maybe even some intentional suppressive elements involved, individuals or otherwise, some malfeasant conduct, who knows? Some arbitraries there in the market. What I would say is, as we were to look at those negative drivers in the market, if we were to look at some impedance on any really positive drivers in the market, in terms of even a real recovery, right? What would that be in terms of restrictions? First of all, any collapses that we had along the way, any restrictions, or we just point to the SEC and say we got some issues, right? They've been on an attack dog mode. So as we look at all of this, do we have, as we look at Bitcoin is now his trajectory to the upside is broken mold with is I don't like the word decoupled, but it has broken the barrier. It's broken the framework and at least front run these patterns that we're looking at from let's just say the additional correlative world of potentials that we have. So what I'm interested in, just to frame this before we get into, let's say, a bit more of a finalized expression here, in terms of a finalized expression of what I'm personally looking for, what I'm interested in. If we can, on the NASDAQ, boom, power up. Okay. If we can power up on the NASDAQ, if we can, and this is going towards some of the trades that you have open potentially on Tesla and NVIDIA right now as well, okay? So all in good time. Looking at NVIDIA, can we power up, boom, on NVIDIA, okay? If we could, I'm just saying that if on Tesla, because that was a train wreck of a phone call. You guys know that with the investor meeting, that was a train wreck of a phone call with Elon. That's okay. Sometimes smart guys they have bad days, no big deal. Don't have a bad month or quarter. Come on, we'll give them a break, no big deal. We like the products, without a doubt. In terms of can Tesla, boom. Now, when you look at Tesla, it's like, well, I don't know about that. Right? It's like they got some problems fundamentally. They got some issues. Good. All right. Because NVIDIA, it's like, well, NVIDIA is hot. It's got the graphics cards. Like, well, a little bit of a concern with China, Chinese regulations, distribution. Not so much a supply side issue as we've had in the past with NVIDIA, but okay, some restrictions, some regulations in terms of AI equipment being dispersed in mass to, let's say, a certain sector that was identified in some recent rules that were shifted to NVIDIA. So let's go from the strategic analysis on Tesla, potential fundamental problems. Okay, just potential. Now support until support is not support. We got a good pickup on that golden pocket, nice trade. As we look at that though, it's opening our eyes into something. It's opening our eyes to something as we discuss Tesla fundamentals, as we discuss NVIDIA. Okay, even NVIDIA, it's no train wreck anywhere near, but NVIDIA, okay, yeah, they have this restriction on what? On computer chips, AI chips being sold to China, big customers. Okay, so we've got a wild example on Tesla of something that could have just literally gone through a train wreck, right? We have NVIDIA, which is, well, it's a potentially important, it's not a train wreck, but it's an important dynamic fundamentally. Then we have Bitcoin, okay? And look at the NASDAQ. The NASDAQ can get picked up by NVIDIA, Tesla can get picked up by a host of other AI stocks. The Mag 7 can play into the action on the NASDAQ. So you can lose Tesla and you can still make this move on the NASDAQ, right? It's in terms of Bitcoin now, we have a little bit of a framework to look at what all is going on. Okay, as you were to assess, let's say, do a fundamental analysis, a fundamental and technical analysis of Bitcoin, because people will argue on Bloomberg and otherwise that, well, there are no fundamentals. There just are no fundamentals as you look at Bitcoin, aside from a limited supply and the halving, et cetera. We know that to be absolutely untrue. We know the fundamentals in terms of the space, the crypto space, were wrought with problems along the way. Even fundamentals driving in this portion, right? If you will recall some of the fanfare that Bitcoin got after the high in terms of fair value considerations from people like JP Morgan, declaring it around the 42,000 was a fair value for Bitcoin. Then what happened? Boom, boom, boom. Okay, so to say that there are not fundamental drivers, to say that there are not institutional wealth clients involved in this area, per the word of JP Morgan, right? To say that the Luna collapse didn't park a lot of traders with a break-even point here who weren't expecting anything like that, or like FTX. And as you look at the specifics here and the correlatives, let's just bring into, and I think it's a good way for you to analyze in and of yourself, combining in the Gensler features, combining in just the tricky, trappy nature, we're gonna say, of even the price action to the downside though. And this is where we start to look at like the characteristic quality set of Bitcoin, looking at the power down to the downside, like, man, we had a relatively nice descending triangle here. And we couldn't even complete that amidst all of the fallout. So what's up with Bitcoin? Lack of predictability, lack of pattern completion. We do have the fundamental drivers. You can make the assessment yourself in terms of ETF, in terms of Gensler FUD, fear, uncertainty, and doubt. You can make those assessments, but that's a proper framework to look at a base level consideration. We've had a lot of unpredictability, even on patterns. As we look at a breakout in pattern, just understand you're not dealing with a perfect dance partner here. You are not dealing with a perfect dance partner. You are not. Now, with that said, incredible levels of volatility, without a doubt, but she gets in her mood. Absolutely, you know this. And as we discuss the fundamental and the technical analytics, to an extent, we really have to say that there is a bit of a, I don't want to say manipulation, but there's a bit of something going on with Bitcoin that we appreciate because we get moves, bam, like this. We get the move, pay attention, we get the surprise jolt when. Now, this is good. We get the surprise jolt, bam, to the upside on this correlative move while we're staring at NVDA doing what? While we're staring at the same exact pattern, review the streams, and we're staring at the same pattern between NVIDIA and Bitcoin launches. I mean, Bitcoin launches when NVIDIA falls out, boom. And they're layovers. They're the same exact pattern, flat bottom, ascending level of resistance. This is what Bitcoin can do. This is the volatility, the unexpected, which is why we are on standby to trade this. It's why we enjoy trading this. Now, that's a lack of predictability. That's a lack of correlation with the NASDAQ, with, guys, with anything you want to throw at it, direct overlay correlatives being NVIDIA. I mean, guys, the patterns are the same. So the driver, fundamentally, the drivers, technically, they're not always going to tell you the whole story. You can look for the perfect answer. You can be the first one on the block, literally on the block, okay? You can be the first one on Wall Street to figure out, man, there's a problem with FTX. Don't worry about it. There's a problem with FTX. We're shorting this. Really? Insider information. Problem with FTX. Let's short it. Great. Where are we heading? Hey, this is a sure thing, guys. This is a sure thing. We're shorting this. FTX is about to go down. Yeah, Tom Brady. FTX is going down. Insider information. Wall Street. Man, we got that kind of a ride coming. Let's roll. Rock and roll to 50% cutoff, even with the fundamental driver. Even with the fundamental driver, if you had a heads up on the FTX fallout, that level of a fallout, you still got trapped at 50%. Big time issue, guys. That's what we're trading. That's what we're focused on. So The bright side of the equation is bam, just trajecting up when nothing else even seems like it's time to move at all. Welcome to trading Bitcoin. We love it. It's fantastic. With that said, we're going to just appreciate technically the fact that Bitcoin either ran a great move, and we're going to see it on the NASDAQ. We're going to see it on, we hope, on NVDA. We're going to see it in terms of a rebound on Tesla. We're going to see it, and there's a whole nother book to read through and write as you were to look at the specifics in crypto. There's a whole nother book to write out. There's a whole nother Solana, Doge, Ethereum, XRP, SHIB, and Matic. A whole additional level of considerations technically to go through. The ones that are high, the ones that are low. We laid them out today in the back. Just what's high, what's low. I want you guys to focus on high liquidity. High liquidity. Focus on your margin. I want you to engage in big trades, right? No more is the, wow, I want to get a coin that's going to go up 10 times. Oh, I want to make a coin go up 10 times. Part of that is because a lot of these just went down like some of these went down 90%. That's okay. If you want some, get some at 90% off. Just make sure you're ready for 98% off. I'm not ready for 98% off on something. I'm just not. I want higher liquidity. Bitcoin. I like to trade it. Solana. I like to trade. You guys know I talk about Solana all the time. Yeah. Solana, impressive, right? Look how low Doge is. Doge is low. What is Ethereum? Ethereum is pre-breakout, right? We're going to say Bitcoin's definitely outperformed. So if you want to recreate some magic, what do you have? 200 weekly on Ethereum. You want to go bullish over, bearish under? Not bad, you can. Bullish over, bearish under. A little bit of a grind, not as well established, but it should trade nonetheless. XRP, it's good news. This is all we got for XRP, with all the fantastic rulings, etc. That thing we've been waiting for years. SHIB, will SHIB ever run again? What do you think? SHIB will run again. You guys want to pick up some cheap stuff? Just go get some SHIB. Go get some SHIB. Just be prepared to lose half your money if you need to and double down. Just do it. You're going to lose half your money. But if you got down to the preceding low here, if you could get there, why wouldn't you want to? Let's take a look at this. You've already had that exact pickup in the market, but 27, 30, what is that? About a 30% potential drop to the downside. It's real low. You want to have some fun and gamble? SHIB is there for you, right? Matic is relatively low. Some of these are just going to be relatively low, and that's it. 200 weekly incoming. What I'm going to say about Bitcoin is I've gone through some fundamentals to show the possibility that Bitcoin has front run the move that we may see on equities. And I'm going to be happier personally in an environment. I think the entirety of us are going to be happier in an environment if Bitcoin just showed everybody at the party how to dance on the dance floor. Bam, up and through this specific, and I just want to prepare you for that, okay? Prepare you for, boom. This is up out into a target, the 23.6, remember on the dailies. Craft this out on the daily 23.6. The important part's going to be the following. As you look at NVIDIA, are we going to get this power drive to the upside on the NASDAQ? Are we going to get this power drive, boom, to the upside? As Bitcoin just power drove, with the understanding and the complication that Bitcoin has underperformed, has been subject to some efforts which require some recovery, i.e. Luna, FTX, etc., i.e. the Gensler debacle that we've had, this last number of years, just the assault on crypto, or the whatever you want to call that war on crypto. So we're looking at the fundamental drivers. I want to give you just a little bit of that rounded, overall comprehensive, as much as we could get into a bit of a framework for the fundamental analysis, as we would not base things sheerly on speculation, okay, in terms of an ETF approval. Not that is wrong, or not that is bad. We had some important news as such in and around these levels, which we recall. But to the extent that we can appreciate the dynamics of the technicals, and that the technicals are shrouded by, even to the downside, with negative drivers, i.e. FTX still not getting full completions on your targets. So to the extent that we're out up and running and Bitcoin wants to change the last 500 days, it's going to have to change the last 500 days. Even on a negative driver, i.e. FTX collapse, we still don't get 100%. Just know what you're dealing with. This is one of the reasons why some traders just don't even want to go there. They will not trade Bitcoin. They say it's too volatile. It's just very unpredictable. It is. Some of the lines are perfectly predictable. Some of the levels, like we focused on, we focused particularly on, I focused fully on, let me do Bitcoin index. I focus, as you know, specifically on the 200 weekly moving average. Why? Because look at the 200 weekly moving average. It is the line on Bitcoin. It's the line. Boom. Right? Revisited. Bam, bam, bam. Right? You got it right. But look at this, guys. Bam. Look at this. Over. Boom. 200 weekly. Now, we got it. Man, we really hammered into it. We laser focused on it. We talked about carry trades. We talked about larger margin positions. And we nailed it. So in the context of everything, in the context of what is Bitcoin right now, Bitcoin has been a huge driver of profits this year for our group. And we appreciate each and every person who has made those trades possible. Okay, including yourselves, of course, but anyone else in the industry who's really working to bring together a great market for us. Just hats off. We appreciate the opportunity to trade, particularly Bitcoin. So you understand the dynamics, the correlatives of the overall market, that Bitcoin has really stepped up front and center. I don't want you to be overly cautious. I want you to understand the complicated dynamics in potentially front running. And I don't want to use the word decoupling, but in terms of just breaking the correlative here, we just will be more comfortable. In my book, we will all be happier. We will all be better off. We will all be, I'm just going to say better off, but we'll all be in a better trading zone. We'll be in a better trading zone if what? Now, I'm talking about the next 2 and 3 months. And trading zone, okay, we'll be in a better trading zone if NVDA can power up, if, pay attention, if the NASDAQ can power up, okay? We'll be in a better trading zone. This is just the one that's gonna fall off the shed here. We'll be in a better trading zone. Personally, we will be if we can get, I think everyone's like this on Tesla, if we can get Tesla down to its 200. You know, if we can get Tesla down to, can we get it back to $110? Everyone's gonna be like that on Tesla, who just rode this up because of the fantastic profits on the way up. When she started to scream to the upside, she did a great job for us and everybody else who was paying attention to it. So, but we want the overall market sizzling. We want the overall markets hot. We want the same within crypto, looking integrated between your alts, between ETH, between XRP. We don't want a stagnant, I'm just gonna say, guys, when you're looking for something else to do and Bitcoin is standing a little bit still, you want something that's hot. We want something that is hot. So that's really what I wanted to talk about today, is like on NVIDIA or on the NASDAQ. And we're not dependent upon equities at all. I know there's a lot of stuff that's running. I bring you guys this and that may run, and some of it has. It's trade-offs, right? You're gonna find, just look at this know nothing, what is this, who knows or cares coin. I don't. On either of those, I just don't. I don't know that this is a real investment. It's just a pattern. This to me is just a pattern that we talked about. TOMO. I am not a dig in the dirt kind of guy. If you want to trade these, trade them. Brought it to you. If you want to trade it, trade it. It's not a big deal. The trade's over. Trade already happened. Now, why would I say that? Pay attention to that. I just told you straight out of my mouth, that trade's over. Don't even pay attention to it. Ouch. You get that? Yeah. Okay, show you a perfect breakout trade and everything else. And what's my gut? I trade a lot, guys. I have put a lot of hours into trading, a lot of hours, years, etc., energy. But what did I just say? That trade's over. What is this? This trade's not over. But if you're there and you're that late on the other, yes, we have upside targets here, but this is not the point to get involved. This is not I mean, it is. But guys, where do you want to get involved on this thing? Where do you want to get involved? Yeah, you want a pre-existing underlying condition. You want an underlying entry here, right? In terms of entry condition or entry, what would you use? Entry trigger trade. You want either the, if you're going to look at the, let's say the green byline on the daily. I don't want to hammer in and focus on this too much, but let's just look at the fire and ice right now. Let's do a little bit of fire and ice calculative. Let me find QKD. When we are, where are we at? QKD. There we go. If you're looking at satisfying what our threshold was, our condition was, is over 200 weekly bullish, okay? Under 200 weekly is bearish, right? Satisfying that condition. We're over, we're long, right? You want to have some threshold, even if we're back here, even if we're, you know, I don't want to say back here, it would have been lower, right? You just couldn't have gotten over then. But if you started to accumulate, even on breaks through it, it wouldn't make as much sense on the 200 weekly, but you might find another average here that you say, okay, well, every time we're popping this average, I'm going to just pepper in a bit. I'm going to get a position in, or every time we drop below onto, let's say, a fire and ice level, I'm going to accumulate. I'm going to dig in and I'm going to put in on my daily. All right, this would have worked out extraordinarily well. Extraordinarily well. For you to say, okay, every time we hit the daily green byline, I'm going to put in some money. Bam, was the low. Boom, you hit it, what, 2 or 3 more times? You really did, didn't you? Nice approach for a new trader, for a novice trader, even for a sophisticated trader. It is nice, right? So let's just say, and I don't want to really throw this, which is a know-nothing investment, right? I don't want to throw this, but you understand if someone's just jumping into the game late here, you guys will agree, you really don't want to just jump. Don't jump in right here. Why? Because anything could happen. Anything can happen. A return to prior resistance? Absolutely. Traders who know what they're doing are going to be loaded up here on this chart. Just look at this specific chart. We agree. Nice pattern framework. Nice pattern. But yeah, traders who know what they're doing are going to be here. Maybe even a little bit trappy and trying to get a position in here on a potential breakdown. Those who own it lower, hey, it's clean sailing. Just relax. Let the market tell you what the market wants to do. Let it tell you what it's going to do. The same situation here. Are we in the power element to the upside? Like that's it, it's time to just hammer in? Well, the time was here. The time really was here. We know, it's a long time ago. Was that a year ago? A year ago on the low. Congrats to all the VIP who traded fire and ice. You had a chance at it at that low. So looking at the underlying resistance, that conditional of the entry, first of all, congrats that you caught it. Second of all, this is just not the area, if anyone is thinking about it, it's like a little late to the game, to say the least, right? We'd be looking, ideally, at a replay down below into that preceding level of resistance, stacked with orders. You guys got it stacked with orders, like big time, big time. We've traded hundreds of these, hundreds and hundreds of these last couple of weeks, months. True, these specific patterns, all through the equity charts. You guys agree? Big time. Big time. This is easy stuff. This is like 9 times out of 10 we break out. What do? Bitcoin can be Bitcoin. It can be unpredictable. We talked about it. We laid the foundational and the technical groundwork for it to be unpredictable. But 99 times out of 100 that we're trading this in equities or anything else, what do we know on breakout? What are you doing on breakout? What are you doing? You're stacking your orders below, right? 100% right. Now, different time frames, you're going to be chopping up different angles. You're going to be looking at different patterns. The big ticket item on that weekly. Let's just focus on the weekly in terms of a level of resistance that needs to be beaten. This is the most unfavorable line on Bitcoin right now for the bulls. Is the most unfavorable line on Bitcoin. Let's see. Boom, 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 boom. Nice, nice. Draw that weekly in, okay? Draw that weekly line of resistance in. Take your targets and match up your 23.6 with your specific drawing of the cup and handle on the specific daily. Okay, if you'll remind yourself to do that on the daily. Let's go through just a few details. And remember, we started this out with a little bit of a naysaying attitude. We just did. Why? Because very few other people are going to just say it. Stay off the 30,000. Bitcoin, can you stay off the 30 G's? Flat top resistance. Also note on your perpetual USDT and your perpetual and your dollar pairing and trading pair there had some differentials from USD, USDT to your perpetuals, depending upon which chart you're looking at. We've got a few different charts in the mix in terms of those dynamics. So let's do this. Let's do this. You guys want to trade? Okay. Let's do this. Let's go old school. Let's line in some, and let me find my Fire and Ice. Let's definitely use Fire and Ice. Let's lay over some Fibonacci's. Okay. You missed the underlying trajectory to the upside. Let's do this. Let's, if we have QKD on the, let's power it into the daily. Okay, now, let's note one thing right out of the starting gate. What looks like it already got hit? Did we? Not quite. Let me see. No, we did not. Looks like a stepping stone there. So when we see that candle set at the 23.6, we note such. We note such, excuse me. May need to get a sip of water here in a second. In terms of the details, what we're going to say is, let's start off with a target at the what do you got, guys? 32,835. Okay? Let's do that. That's going to be the preceding. Really, it's going to be a confirmation of your, and depending upon what time frame you're on, but the daily, it would be a reinforcement of the ice cold short at this point in time. The 38.2 would be a reinforcement of, you see those kernels flip, a reinforcement of the golden short line. Okay, so as we look at the specifics here, let's walk this up with some nice targets. If you want to become more aggressive with it, let's walk up with some more aggressive targets. All right, let's grab the most aggressive target that we can within reason in the start of the trend. Okay, if we were to look at the start of the trend here, from the trajectory underneath the 200 weekly moving average, and let's be prepared for some indiscriminate price action. Okay, let's be prepared for some indiscriminate price action, and just in that it is Bitcoin. Let me see where we were at on the specifics here. Let me get into the 4 hourly. Let's go to the 4 hourly. Let's go on the candles. And let's see if on the 4 hourly, on the candles, real close. But I'm going to draw this. If we go to the lines, if we start hunting through the lines to the candles and finding a specific, if it gets loud here, it's you guys know my yard man. He'll just, all I have to do is start streaming, and my yard man wants to, either it may be the neighbors that are dressed up and just decide to come over here and make a bunch of noise with the lawn mowing equipment. They come every time I turn the stream on in the afternoon. They're here almost every day, no problem. We don't have that much grass. Where this multi-complex compound overlooking the golf course, we have like not much grass on this side. It's all on the golf course. Looking at the details, hope you guys are doing well. I had a good weekend. All right. As we were to look at the specifics, and have had a great week so far, the low to high, just mark them. Just mark them. Realize we may have some issues. Let's go to the hourly, and especially some issues because of the differentiation. Pay attention. We'll have some differentiation on the charts because between USDT, between USD, and between some of the perpetual charts that I've seen, we got some problems. We got some problems, so pay attention. Let's just mark this out. If you're going to take from Bitcoin index, which we like to do frequently, we like to try and stay off of Binance if we can. We just do. A flat out Bitcoin index, we'll take it. That's just the entirety of the history of the price action of Bitcoin. So we trust that as well, and as much as we can trust anything. Let me draw this right up to here. And I'm just going to say that 33,153 is, as of right now, a valid target. Okay? Now, if you wanted to get even more aggressive, what would you do? Okay, if you wanted to get even more aggressive with your standard Fibonacci's, what would you do? Okay, even more aggressive would be taking the any preceding kind of flat top in this zone, any type of a preceding flat top, any type of a curvature or anything else like that that had its own breakout, and doing what? And saying, okay, well, I'm going to start my Fibonacci's right here. Boom, I want my targets up here. All right, now that's going to be a bit variable depending upon, guys, we like to do that after a nice runway event and then trajectory to the upside where we can displace anything that's not a preceding part of the current trend move, okay? So we can isolate the specific trend move. But if you're really looking to become increasingly aggressive, the bottom line is you're going to be moving up your specific Fibonacci's. We don't always cover this. So to the extent that we can cover this and the notion of how to become increasingly aggressive as we continue to target, that is one mechanism in play. It's a valid mechanism. I encourage you to work on those. Okay, just work on them. If you, good Lord, heavenly days, if you have watched the entirety of our streams, which I hope you haven't watched all of them, some of you have, you know the days when we were hitting fibs every single day. We have Fire and Ice to help us. Set those alerts, without a doubt. Watch your capital control line. The key level, as we were to look at the key level, that's just a little bit of talking in terms of if you're looking to target Bitcoin right now. If you're looking at, and let's go ahead and let's get into, if I can get into, let me see if I want to look at some targets that we have. Let's see if we have, let's see which specific chart I need to pull up. Just a few moments, if I can, if it's, there we go. On Bitcoin. Too many charts, let me just get rid of some of these. If you guys don't mind, let me erase some of these. There we go. We got too many templates up, working on some additional dev work for you guys and the group, etc. Let's expand this chart out so we can take a look at things. Real exciting week, guys, huh? Exciting year so far, we agree? You bet it, you bet you guys. So, looking at the details involved right now, 77 minutes showing with a bit of a target. We're gonna say this, I wanna focus in on, what is that weekly? Okay, this line in the sand, I would love to just say, like the 200 weekly, I would love to say this is the line in the sand. You're bullish over long. You're bearish under short. Okay? Yes. Okay, the specific 32,644. I wouldn't tell you this without a huge caveat. A huge caveat, meaning an exception, meaning something that you need to consider in addition thereto. Not necessarily exculpatory on my behalf, but a detail that if you miss it, you could be in some jeopardy. It's going to require us to hit it one more time, okay? If you didn't catch the hit already on this level, okay, that doesn't make life much easier for you, okay? It doesn't make life easy at all, in fact, because we just had a perfect hit into this yesterday. After we blasted through it, bam. We had a perfect re-hit on it. So it's easy for me to say, hey, we're long over, we're bearish under. If you caught that yesterday, the world is yours. You got it. If you didn't hit it, then you got an issue, right? Then you got an issue. Why? Because we have to hit it again. We have to hit it again. Work on the following. Work on the following. Okay, like, you know, we're in a bull flag up and over this specific level that we have to hit. You know, life's not fair. Oh, the problems that you have. Huh? Oh, these problems that you continue to have. Huh? You don't want to be in a bull flag or a bull pennant up and over a target that you're supposed to hit to the downside. Do you have orders waiting right now? Do you have orders waiting right now? Do you have alerts set to wake yourself up, to get yourself together if and when this level engages? Do you have alerts set? Alarm set, bam, 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 it's on. It's not going to revolve around you. It's just not. In terms of that, learn to try and revolve around it, meaning the market, a bit. It's not easy. It's a good challenge. It's why we like it. You guys know that. It's why we like the market. So looking at the dynamics here, I'll just give you the 32,644 as your new 200 weekly moving average. That's it. That's it. Now, that line's going to change. So was your 200 weekly moving average. True? Yes. Bullish over, you already hit it once perfectly. I can't guarantee you're going to hit it again. We did hit it just exactly. Now, if you hit it exactly, where are we at? If you hit it exactly, okay, you're up 2.2 2.8%. Did you have a flash trade? Did you have a carry trade? Same equation. And so the fundamental and technical analysis we went through with the discussion over on equities, pulling in some correlatives, some decorrelation, some lackluster performance based on patterns, even to the downside. While you're looking at your targets to the upside on Bitcoin, is prepare to be surprised. If you're going for the full 100% on your moves, Bitcoin hasn't been the asset to trade. It's been parked at the golden pockets, at the 50%, it's been a shootout on probabilities. Fact, on those maximum probabilities. So the one thing that just did really well was the over the 200 moving average, weekly moving average, bullish. Under was bearish. If you can negotiate that line again here in the sand on your weekly standard deviation, go and get it. Go and get it. That is an ideal approach to the market right now based upon the parameters that we have in play. Now, if you were to miss it and you have orders here, and it's like, well, I got to hit it. We got to hit that level. What do you have above that level that you can work with? You have your hourly 20 moving average, fact. You've got your soon to be 4 hourly 20 moving average, fact. So you're going to have some opportunities to power in. That 4 hourly has been unstoppable. Remember, that caught the bottom nearly, essentially. Rounded in, 4 hourly, big time. Nice move to the upside. Haven't challenged that with a move below, so that's a hot ticket incoming level with support. So don't be overly consumed by the 32,644. Be prepared always for a rehit. And you guys know this, it's just, it doesn't go without saying. Now's not the time just necessarily just to long, guys, don't moon it. No, you moon it here. You moon it here at the 200 weekly, right? Like we talked about for a good week, huh? A good while. We talked about that up through here, didn't we? We've been talking about that for how long? Not the whole time. Not the whole year that we spent along the 200. True? True. Hey, true. We talked about it for 2 months. 2 months. Carry trades, flash trades, quick trades. Yeah, that carry trade dynamic, multiple trades decompartmentalized or compartmentalized so that you have a carry position. We talked about it for 2 months. Yikes. Yeah, that's a lot of work. What do we got going on? Is it J Mac? What's up, J Mac? What's up? California in the house. California, what's up, brother? California. Boom. Hope everything is going well. J Mac in the house. J Mac trading. What's up, J Mac? Love to see the trades. Love to see those trades. Let's see if we can get some of those trades in. Where are they at, J Mac? Let's see what we got. Bam, 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 bam. Look at this. Boom. Just racking them through the roof. Just doubling. Essentially, that's 4 doubles plus on your money, right? And 90%, 80%, but then 107 and 168. So that's building 4 racks. 1, 2, 3. A little bit, yeah, covering at least 4, and then some. Nice to trade, J-Mac. Nicely done, my friend. Way to trade. Yeah, way to go, guys. So let's put the line in the sand at this. If you want to conditionally trade on the hourly, if you want to catch on it, all right. If you want to catch on it and you say, well, I don't want to trade this over and under 32,645, that weekly standard deviation, I understand we need to flip it to the upside. Okay, good. We need to flip it to the upside. That's my line in the sand right now. You say, okay, fine, I got it. We need to be long over, we are bearish under, we're short under. Okay, so I need to navigate, I need to negotiate that line, right? Now, the issue is the following. If you want a more aggressive catch line in case this thing leaves you behind and you're just not satisfied with the lower entry potential, what do? What are you going to do? You're going to get the hourly 20 moving average. Yeah. And you're going to get the hourly capital control line, which right now are the same thing. And you're going to play that hourly for a breakout of this flag and say, that's fine. If we go north, I'm on this specific line. Okay. Not as much of a critical level of interest. The exact entry here was beautiful. Two nice quick shorts on that hammer up to that level. Shorts were waiting. Yeah, nice hits. Did you pull 40, 50% off of it? Did you pull a little more maybe? 60, 70%? Hey, on these hits into that weekly standard deviation. I have no idea who these guys. I don't know if you can hear the yard. It's just funny because they come every day. I don't know why they come all the time. It's just funny, guys. Anyway, I need to put a camera out there so you guys can all wave at them or something. I don't know what we're gonna do about the yard men. It's just humorous. So looking at the details, like I know London, I got the 32.6 covered. But don't make me trade the over. Don't make me trade the 20 moving average on the don't make me trade the 20 moving average on the hourly. I'll do anything. Don't make me trade the bull flag. All right? All right. Well, then you need to be prepared to be left behind. If we decide to traject to the upside, good news is what? You don't have to be completely reliant on your return to the weekly simple moving weekly standard deviation, topside standard deviation if you miss that level. Okay? You don't have to be reliant on that. Okay? You go with the hourly up and over. You go with your cap line on the hourly and say, fine, I'm going to reinforce this level and be long up and over the hourly 20 moving average and the hourly cap line, the RSI, stochastic, and MACD. Yeah, we got it. We got it. We got it. Good. So that is the game plan. That's the strategy. Sure, it's easy now. Sure, we got it now. It's easy. Just tell my dictaphone, my secretary, that that's what we want to do. No problem. We'll go have lunch. We'll hit some golf balls, huh? No, it's not that easy. We have to pay attention to every pattern, to every probability, to every, guys, get in from the bearish to bullish, the hidden, this and that, divergence, to everything we've got going on without being overly consumed with the technicals. We got to keep ourselves number one most important thing. Listen up. The number one most important thing in the market right now is we just had a great move to the upside. True, yes. What are you going to do? Where does your focus need to go from here in the market? Q4 is going to be what? Well, it's done, man. Q4 is over, man. Don't worry about it. Q4 is great. We're going to sit around and talk the whole time. Are you crazy? You must be crazy. You are in the other trade group. Yes. Q4 just getting rolling. Just getting rolling. Just starting fourth quarter. Blowout quarter possible. Going to work to get it? You better believe it. Focus goes up. Market focus, dedication, closing out the year strong. This is the fourth quarter. This is the end of the year. Everything else that happened earlier in the year doesn't matter at all. Okay? Do not look back at these moves or at what is going to be created in the fourth quarter and say, I guess we really could have done. I mean, I guess we really could have. We could have, and we really should have. And guys, focus goes up through here. Bam, through the roof. Okay? Technical diligence, all of it. Get your books by you. Open it up just for fun. Open up New York Institute of Finance. Reread a pattern that's in play just for fun. Amuse yourself and work harder. Try and amuse yourself with what success we just had, and try and amuse yourself and step it up. See whether or not, as we conclude the fourth quarter, if we can match what we just did at least. If not, try and, guys, hit it at a multiple. See if you can involve yourself at a level of diligence and hard work that you're going to look back next year and you know how good you are. You know how that next year is going to just fall into play because, guys, you're at a critical level in terms of your skill development, in terms of the progress potentially of the movement overall of the markets. We're at a critical level, so this is not the time to just kick back, relax, and well, it's Tahiti next week, and then it's going to be Bali, and then it's going to whatever we got going on, guys. Let's hit the market. Let's hit the fourth quarter. You want to know what fun is? Fun is being able to look back at this quarter and say we nailed it, and we could have relaxed. We could have said no big deal. We nailed it. Yes, we nailed the 200 weekly. We nailed it. So Now we're on the specific weekly standard deviation. We agree? Yes. I'm just giving you guys some words you need to hear, okay? It's not about the hype. It's not about, guys, it's not about the hype. It's not about the, it's not about anything other than just doing really well in the market. That's all I want you to do. That's all I'm going to continue to inspire you to do. If we talk about like any complication you may look at technically, the sole competing factor may be the following. Let's look at this. As we look at, let me take off some of these indicators. Hope you're all doing well. Don't want anybody to feel pushed or rushed or overly competitive or anything like that. You guys imagine if you were on some floor, you're on some floor with a bunch of traders and everybody just jawing each other's ears out and everything else, guys, on the phone, breaking phones, just enjoy it, okay? Let's note that we have a differential here, preceding resistance. Okay, this is noted. Our weekly complication, essentially, potentially, okay? Your weekly standard deviation is gonna play. It's just gonna play. It's already played, exactly. It is the key distinguishing feature in terms of your macro technical indicators that's on the map. It just is. It already played perfectly yesterday. It is the preceding, and now I don't want to be on the 8 hourly, right? Don't want to be on the 8 hourly. Do I have to go to the 8 hourly? No. I can go to a daily feature preceding level of resistance, hit in here, bam, it is that level, okay? It is that 32,000. So as you're lining out potential complications to the downside, if we're going to lay down some additional support levels here at a preceding breakout, okay? I'm just going to remind you, first of all, the weekly has already traded. If you're short into these levels, if they do push, you're going to be happy that you're shorter earlier. To the extent that you want to, eliminate this specific factor here, which is a perfect overlay, okay, which is a perfect overlay here. If you look at that on the daily, it's going to be right in line with your weekly, okay? That first candle that could even be essentially that resistance, which could even be a flip to support scenario. You can walk down and we'll have additional potential support, resistance to support scenarios. We agree? Yeah, you'll have them all the way through here, right? You'll have targets the entirety of the way down. Okay. What I'll say is that's your first hitch, which is that weekly, and it's just the biggest technical level that we have on the macro to look at. The 200 weekly just played perfectly. That weekly standard deviation is going to be a big ticket item. It already has been a big ticket item from yesterday to today. Cognizant of the fact that we have pickups below. Don't want you to be over complicated, but as we look at achieving this below, what's our problem? What's our problem? Which is getting back to a preceding flat, guys, or a preceding pivot to the downside. Your problem, quote unquote, is going to be that, well, you're kind of pushed up through a pattern. So you're going to have to bust the pattern to get back down to your specific level of interaction. Okay, so thus we're going to just settle on the weekly. We agree? Underlying level of interest, sure, but looking at both the pivot in of the candle framework preceding on the daily and the specific dynamics in play here. We're just settled on the weekly standard deviation for aforesaid reasons, okay? For the aforementioned reasons. I think we all concur on that. Yes. Now, we're going to get in the back and trade. You have your catch save to the upside. Now, I want you to trade a breakout on the hourly unless we're just going to launch. If we're going to launch, how good have you gotten at negotiating over and under? You got a moving average, you're over bullish or bearish under. How good have you gotten? Have you gotten better? If you haven't gotten better, you haven't worked on it. If you've worked on it, I know you've gotten better. That's the cool thing about it. And I'm so excited about the 200 and bam, what a nice ride. What a nice ride. Congratulations to all the VIP Hey, this is London with Bitcoin Spike at VIP Trader. Way to trade. Nice to hit into Tesla at 2% again today. We got NVDA up a point. And remember those differentiations we went through, the complications, appreciation that we have for Bitcoin, both in the down overall market that she can just up and run as she did. So that's nice. We appreciate that, the distinction that that gives Bitcoin, our primary asset and focus. And we'll be around tomorrow for the opening of the markets. Let's do that and let's go get them. JMac, way to trade. Nicely done. If you guys haven't taken a look at your machine learning suite, there's a lot going on in your machine learning suite. Okay? Have you done your RSI and MACD featured engineering? Have you done that? You can change it to the specifics here as you were to look at the bars, not the candles, but the bars. Your RSI and MACD feature engineering. We still need to cut a program set training guide on this on machine learning. It's nice. It is nice, guys, in terms of just the specifics on it. And you'll find just a level of variability. It's not the fastest thing. It's better to spread out on 8 wide in terms of the, and this is the Bitcoin perpetual. What is it? Look at the Binance perpetual. Bam, through the roof, down, backing up, through. So we see that differentiation there. But take a look at, this is on balance volume without RSI or without RSI. So this is actually, you're going to just see, this is one of the nicest, if not the nicest that I have seen, definitely. The oscillator here of on balance volume. Looking at the hourly framework, when we're green, we just continue to go to the upside. So I'll let you guys work with that, maybe lay it out in terms of the 8 wide without a doubt. And this is London.